I'm here today with Martin Hull, Chief Executive of AIM-listed Echo Energy, Epicode Echo, an oil and gas exploration, development and production company with onshore assets in Argentina. Martin, it's good to speak with you.
Good to be here, Helen.
It's been a transformational year for the company with some major developments at your Santa Cruz Sur portfolio of oil assets in Argentina. Can you provide us with a brief overview of Echo Energy and this portfolio of assets? And I'm going to bring up a little a map here to show viewers the assets.
Yeah, great. Well, look, so Echo Energy is a Latin American focused energy company. We produce oil and gas in Argentina. And I think that's very important. We've got a substantial production base. So currently we're producing in the order of 1,700 BOE, barrels of oil equivalent per day. A lot of that is gas, but a substantial amount of oil as well. And it's produced in the Santa Cruz Sur basin. So this is down in the south of Argentina, where we've had great success in commercializing our production, selling it for premium prices, and we can go through that in a bit more detail. Importantly as well, we have a substantial asset base, a reserve base. So that means that in order to grow our production, we don't just have to explore with all the risks that entails. We have lower risk options to substantially increase our production. And again, hopefully we'll discuss that a little bit more. And whilst today we're in Argentina only, it is our goal in terms of production in Argentina only. It is our goal to grow out of that. So we're looking across Latin America. We have some history in Bolivia where we've been in the past, have some assets still there, but growth is very much on our agenda.
It's really significant that Echo Energy remained cash generative throughout the COVID crisis, but even more significant, I think, for the company were the VAT refunds and the restructuring of the company's legacy bond arrangements. Firstly, can you tell us about the restructure? And secondly, what new opportunities have opened up to you as a result of this?
Yeah, so look, you're right. Being cash generative in the difficult market and the challenging market over the last 18 months has been critical. And that, I think, is a unique thing about Echo, quite different to some of our peers on AIM. So look, the debt restructuring was a huge piece of work that we undertook earlier this year. We successfully completed it, and I think that was, as you say, a huge step forward for the company. Critically, what we achieved there was debt that was otherwise due relatively near term and with interest payments. We pushed that back. So as a result, now we're talking about our bonds, our bond debt. We push that debt back to May 2025, and there are no cash interest payments from now until then. And that has released substantial amounts of capital for the company, allowing us to reinvest in our assets rather than paying that money in cash to the debt holders. The support that our debt holders gave us was, I think, a vote of confidence in Echo and the prospects that we have. They wouldn't have given us that if I think they didn't believe in the story and believe in the prospect of the company. But critically, not spending that cash against debt allows us, as I say, to reinvest it. It allows us to grow. It allows us to drive the company forward rather than just servicing the debt, and is a hugely important step forward.
Super. Okay, so back to operations then. You published an operational update to the markets on August 26th, citing significant operational progress. You were delivering against objectives. And also you reported a near 50% increase in liquids production, which is a huge milestone. So together with the upswing in oil prices and gas prices, presumably this will bring more cash into the company. How will you deploy this cash going forward?
Yeah, so look, you're right. We've made a lot of progress in recent months after obviously a challenging period, and that is we've already talked about sort of the financial side of the restructuring on the asset base. What we did in 2020 is we shut in some production because we weren't able to sell it. That was a problem. But since then, we've gained hugely premium prices on our gas, and we're now regularly selling our oil, which is, again, a very important commercial step forward. So, having taken those tough decisions last year, it has put us in a much stronger base from where we are today. And we have chosen, because financials have improved, cash is being generated much more, much larger volumes than before. It has allowed us to reinvest. So what we have now delivered, we said we were going to do, and we have done, is we've upgraded infrastructure in the field. This was particularly around the pipeline, which over the last years needed upgrading or needed replacing, and we've now upgraded it. We've increased some sort of power generation capacity in the field as well, and various other bits and pieces with our infrastructure. And all that allows us to increase production, because that's the goal. So as you mentioned, we've switched on some wells in recent days. There's a lot of work to do that. It takes time, it takes effort, and I'm hugely proud of our partners, our operating partners in country, who have done that in difficult circumstances. But we are now seeing the benefit of that. So the oil production has increased, as you mentioned in our RNS last week. It is up approximately 50%. Obviously, it varies day to day, but that is a great step forward for us, and is game changer for the company in many ways. Now, importantly, that's not the end. We see significant more opportunities for that. So I think in our RNS last week, we talked about switching on 4 wells. We've got a further number 6 in the very near term. In addition, there's more wells that have only recently been switched off, or during last year. So there is a lot of runway for us to increase that production, and of course, we expect to be communicating to that market as we go. But again, because we spent the time, we did the work, we improved the infrastructure, all of those increases now are going forward are going to be easier. So that is really good news for everybody involved. I also wanted to talk briefly about the premium prices to the gas that we have achieved. I think this is driving the sort of the commercial attractions of Echo. We negotiated those a few months ago, and they have fed into substantially higher revenues, which again is very positive.
Excellent. It does seem, though, given Echo's current market capitalization, that the market has yet to appreciate the value of these additional oil and gas sales, and of course also the premium prices that you're bringing into the company. Where do you see the value inflection points arriving as we go into the second half of the year?
Yeah, I think you're absolutely right. There's no doubt that we had a challenging time last year as a producer, but that is behind us. We're now very much on a more secure footing, and we're looking to the future with confidence. I think it also takes a bit of time for the positives around the debt restructuring to sort of feed through to the market and to really be understood, and the bonus that gives us in terms of cash. Securing cash generation. We, in the months ahead, we've already delivered this pipeline infrastructure upgrade. We expect more production increases. As I said, we're relatively low risk in terms of the increases in production. We're not talking exploration. We're in the first instance talking switching on wells that only recently were producing. We've then got a very detailed program of workovers. And that's next on the list. We've already begun some of those and categorizing them and prioritizing them, but we're going to work through that, which each workover has the potential to increase production. What we want to do is do it correctly. We want to do the best ones first. We want to use the ones that have the greatest impact to cash flow first, and you'll see that, and investors will see that start to feed through in our production numbers. Having said that, in the last month, to increase liquids production by 50% is already a very big and positive step.
Very much so.
But I also want to emphasize, and perhaps we'll talk about it a bit more, is growth. So we're not resting on our laurels here. We do want to drive the growth, and that is what we're here for, and that's what we're looking to the future for.
So on the subject of growth, of course, you have some blue sky assets within the company as well, and one of those is an exclusivity agreement with GTL International to identify energy assets in Bolivia. Firstly, is there any progress here? And I mean, given the progress you've made already with Santa Cruz Sur, the future looks very exciting. Is this an area that you see will drive future growth as well?
Yeah, so I see the growth coming really from two areas. So there's within our existing portfolio, and again, a reminder that in recent past, these assets were producing substantially more than they are now. So that is a story about picking the right places to invest our money and to drive the growth, the risk reward for that growth. And there is a range within our portfolio from sort of incremental growth through to larger, bigger potential, and one of the assets there is the Campo Limite well, which we're waiting to test, and we hope to in the near future, and of course make all the appropriate announcements around that. So that is within the existing portfolio. Then outside of that, we do want to grow through M&A. Inorganic growth. However, I think it's very important to say that it was always our intention that we will only go for that growth if it beats or does something different to the existing growth that we have in our portfolio. We are not short of growth options, but we want something to add, and that can be in a number of ways. I think the deal that we did in Santa Cruz Sur demonstrates our ability to successfully secure positive deals, value accretive deals. But we would like to grow outside of Argentina, so that's something we're looking at. And you mentioned Bolivia. It's a place where we have been. It's a place where we have a lot of understanding. We've signed an MOU with a company. We want to work with others in order to partner in many of the countries that we're operating. Partnering is an important piece rather than doing it all alone. And we also want to grow across the energy spectrum. So we are looking not just solely at oil and gas, but also wider than that into the renewable space potentially. So we're very excited about that. Again, any growth that we undertake, inorganic growth, we have very strict criteria about what it must deliver, the risk reward, the sort of returns we're looking at, etc. And we sort of undertake very, very detailed analysis. But that is one of the areas where we think as a board and as a management that it's important for us to have the ability and the flexibility to take this company forward and the tools in place from our shareholders to enable us to do that.
Of course. Onto the company then, along with the VAT refunds and revenues from oil and gas sales, how does the financial position for Echo look at present?
Yeah, so the position now is marked improvement than where we've been, and we can look forward with confidence. Where the commodity prices, oil prices are higher, significantly higher than the tough times we had last year. Production is up. We've secured premium pricing for our gas, which is a big driver for revenue. So we are generating healthy revenues, and in due course we'll be publishing all of those figures. Added to that, there's the huge step forward with the restructuring of the debt. That was a near-term concern. It is now not. We've pushed it back. As I say, no substantial for the bonds, no substantial cash payments until 2025, May 2025, and that is a great step forward for us in terms of our balance sheet. So look, we look forward with confidence. Who knows where the oil prices will be, but we are doing the things that we can, which is get our production up, with managed cost, but and that allows us at these prices to generate significant revenue.
Yeah. Well, Martin, we're running short on time. Before we wrap up, you have covered some of these already. Can you just bullet point what investors should be looking out for during the remainder of 2021?
Yes, so you will see continued operational progress. So that'll be switching on more wells, delivering higher production. We'll then get into our workover program, and that will extend for a period, but we're up and running with it, with the work around it. So those are our kind of bread and butter as we progress, increasing production. I think we've demonstrated as a management an ability to sort of renegotiate various things and secure very attractive commercial terms. So we continue to work on that, and we've already talked about inorganic growth. So that is an area we're spending time. There are, I believe, exciting opportunities for a company of Echo's size and Echo's ambition, and in Echo's geography as well. So I think we're looking forward with a lot of confidence.
A lot for investors to look forward to then. Martin Hull, Chief Executive of Echo Energy, thank you again for joining us today.
My pleasure. Thank you.